How do we find and hire property management companies that we can trust are going to take care of our tenants and our properties the ways in which we want them to? On this week's episode of the Aid to Assets podcast, we're going to get into all the details. How do we trust but verify everything from our property managers, our contractors, our people that are on the ground that are looking for property for us when we may not be in the same city? You are building an entire team as you are building your real estate business. We're not just buying properties, we are buying businesses. And so it takes an entire team in order to do it successfully. And we're going to let you in on the secrets to how this investor did just that. This is your Aid to Assets. Welcome to the Aid to Assets podcast, the ultimate podcast for aspiring real estate investors. I'm your host, Tiffany Watson. Join me as we discuss real estate investing for 9-to-5ers. We'll talk about everything from money mindsets and property ownership and different strategies you can use to invest in real estate. I want to empower investors, especially those of us who are working full-time, who want to navigate the world of real estate, uncover the secrets to building wealth, generate passive income to achieve financial freedom. Equip yourself with resources from experts, practical tips, and step-by-step guides on how to kickstart your real estate journey. We'll also hear from 9-to-5ers who started to build their own portfolios, what they did and how they did it, so you can do it too. Tune in and transform your main job into your biggest silent investor in your real estate investment business. This is your Aid to Assets. Hello, everyone, and welcome to another amazing episode of the Aid to Assets podcast. I'm your host, Tiffany Watson, where here I get the opportunity to interview investors that have started and scaled their real estate portfolios so you can hear how they did it so you can do it too. And so I am so excited for my guest today because not only has he done it, but he also gets to help people do it as well. So we're going to get all of the gems. Kyle, how you doing today?
What's up? What's up? Doing great. Good to see you. Thank you so much for having me here.
Absolutely. It is my pleasure. I am so excited for people to get to learn more about you. Y'all make sure, go ahead and hit that like and subscribe button at the bottom. Make sure you have your notebooks. You know how we do around here. Note takers are change makers. And so we're going to change the number of houses we got in our portfolio at the end of this conversation. So Kyle, to start us off, we like to start the show with receipts so people know why they should be listening, tuning in. So why don't you tell us a little bit about your portfolio and what you have built for yourself and about some of the people that you've gotten to help as well?
Yep. So receipts wise, for me, probably the biggest thing is everything I've done has been within a 2-year period. You know what I mean? Maybe 2.5-year period. And I've invested in 2 different properties, 3 other Airbnb investments, and I've run the gambit. I've made a lot of mistakes. those are good receipts as well. That when I go to help other people, I'm like, okay, this is exactly what not to do. So I have a good amount of that. My wife and I have built up over $500,000 in business credit. So I have the cards, like they're sitting right here on my desk. But I've been able to leverage those for personal development, for education, and for investing as well. That's part of what I help other people with now is like, what was the journey that I used to basically get that? Because it just opens up like a pressure valve to be able to have extra funds that you don't have to pull out of your own pocket. So we've been able to navigate this journey. So we do have a property in Chicago that started off as a flip. Everything went wrong and the market changed. And now we are holding it and there's a renter there. And then we have another property that's in Baltimore that is being rented by the room. And it's a 3-unit. And the law states that you can have 4 people per floor, per unit legally. So that's what we have right now. And I have, I think, 10 out of the 11 tenant rooms are filled there. So that's like the official portfolio. Like I said, I've been inside and outside of other investments, dabbled in Airbnb. I actually help people in other investments connected with the trucking industry as well. That's like maybe a separate conversation. But that's pretty much what I've done so far. And this has definitely been like very busy, lots of lifing, crazy stuff happening. You know what I mean? Like just getting everything that I could done in between life.
Yes, absolutely. Thank you so much for sharing. So y'all, first thing that I want to just make sure y'all hear from Kyle, it does not take long to make a decision. And that's where some people get stuck. But making the decision is the quickest thing that you can do, and then execute. Kyle has been in this for 2.5 years. And so you can change your life in a very, very short amount of time if you're willing to put the work in. So Kyle, one of the things that I love about you is you gonna go get it. You are very creative. I don't feel like there is a problem that you are not going to find a situation and how to solve it. But let's start from the very beginning. What was it about real estate that made you say, this is where I want to invest my time?
Other part of the background is I'm a musician first, right? So music and like audio engineering has been most of my life since college, and teaching in some form. So I was doing music for a while, and then when COVID hit, I kind of like took a pivot because I was playing in a band, and that kind of stopped. And I was like, okay, I'm just gonna start recording my own music. And so I did that for a little while, and then I realized I need something where I can secure my financial freedom, so I can pursue music and everything else I want to without having to worry about money. And also, while I do that, my wife doesn't have to work as well.
Mm-hmm.
So thankfully, I'm married. My wife has a pretty solid job. So that gave a little bit of leverage to be able for me to put more time into the entrepreneurial space. When I made that pivot, I decided to study to become a coach. And at that same time I was studying that, I was exposed to real estate. I knew about it, but I took my first course. So that was like, you talk about decision making. It was like, okay, I'm going to put the money down. Like I'm going to take this course. So I took it and started just executing wherever I could, started networking, started meeting people, just doing everything that I could. And that was the start of it, because in my mind, real estate was the thing that if I can get into this and do the work one time, it can be something that can give me more return, and if I push it aggressively enough, I might be able to get to my financial freedom number where, again, my wife doesn't have to work. I can just focus on whatever I want to. I could do that sooner, and it would be more consistent, So that was the reason that I got in.
Love it. Now, you talked a little bit about financial freedom. And so one of the things that we talk about here on the show is that looks different for everyone, what that means. So how do you define financial freedom?
Yes. And this is something that I love to do. My recent like mentorships and everything starts with this financial freedom exercise, right? Because to me, it's really important for people to not only know what it is, like know that they want to push for freedom, but know like specifically what are my numbers and what are those numbers based on? Because a lot of times, a lot of us maybe have grown up with like weird views towards money. Like we have a bad relationship with money, even though like we might say we want it. But then we think like, oh, people with money are bad, or like, this or that, or whatever you might have grown up with. But so that's why I start with the items. Like, what does your ideal lifestyle look like? And like literally write down all of those things, right? And every line item has a dollar amount attached to it. So if I want to take a trip, if I want to send my mom to Cancun 3 times a year, then I put that, and then I look up the actual trip, and I write down the amount, and then I figure out how much would that cost monthly, right? So there's a few different phases of it, but the basic one is like, I have the freedom from having to pay my bills. That's the first layer of freedom. And then I have the freedom to do what I want. That's like the second layer. And the spreadsheet that I have 4 or 5 different groupings, milestones almost, to say, okay, this level of freedom, this level of freedom. But those are like the 2 in general that I'm always preaching. And I always want people to push for like, what is the exact number? Because I don't want people to overshoot their number either, and this might be a weird thing because I'm all for dreaming big. Like I'm like number one proponent of dreaming big. But I think the issue with if you overshooting the number or just like saying some number that's just out there is this life is not promised. So when you're overshooting, you could be pursuing money that you could just be spending your time. Like once you get to this point, now I'm spending my time living my life the way that I want to and with the people I want, having the impact that I want and all that stuff. So all that's really important to me.
That's so good. That's so good because I tell people often, do you know how much it costs for you to live? Is like the basic first level. But then do you know how much it costs to live the life that you actually want to live? Some of us think it's way more expensive than it really is.
Yes.
And so I'm such a fan of what you just said of like, don't overshoot because some people, I've heard people just like, oh, I need $20,000 a month to live. But do you really, like, what are you really going to spend $20,000 a month on, especially if you have nowhere near that, right? You wouldn't even know what to do with that money. And so I love having line by line what actually matters to me, because that also helps us to determine, am I spending money in ways that I value? And so when you talk about that relationship with money, that's another component of it, is having a relationship where I get to spend money on things that I want to versus it always feeling like it's a burden on money's just being spent everywhere on stuff that I don't even really like.
1000%. I'm with you, fully on board with everything you just said. So.
Okay, so now you got into this mentorship, you started talking about financial freedom, you got your numbers. What was it that made you say, I'm ready to get in this first deal?
So for me, there was a lot of, I was always one to like, I want to aggressively pursue this as much as I can, right? And I wouldn't consider myself naturally an aggressive person or like, super like loud or anything like that, or outgoing or like go-getter. It's just like, but I want it quick, you know what I mean? As quick as possible. I don't want to rush it, but I want it as quick as possible. So for me, it was, searching, again, making the connections. And like, I had a spreadsheet, and it's interesting when I look back at it, but I probably had 100 different properties, like deals. I had made this calculator of like, okay, if I put this number in, then these are the numbers that are going to come. These are the expenses. And, so I would look at a deal and I would just constantly be adding numbers to that sheet. And then eventually, so I got to the point where, we were waiting for, like, through the course that I took, we were waiting for kind of help from the agents and from different people provide the properties and the deals and things like that. But it was taking a while because there was a lot of people and it was like a bottleneck. So I took it upon myself, like, okay, I need to know this stuff. So if I can start looking, you know what I mean? I got a software called Privy. I don't know if you've heard of that one, but I got Privy and I was like, okay, let me start looking at that. And let me understand the comps and let me understand that. So I was just getting as much information as I could and just practicing so that when it came time for me to see something, at least on paper, I could say, this deal makes sense. Let me send this off to the team that I've established and like be ready to move forward, So as far as like being ready, at least like having that understanding on paper was helpful for me, and just being able to kind of practice that and seeing different numbers and just like, okay, I gotta try this at some point. And even if I fail, the sooner I fail, the sooner I can learn from the failure and the sooner I can succeed. So, and this is like opposite of what is comfortable for me. So like all of this has been hyper uncomfortable, but to me, the way to surpass discomfort is like, what am I going after? So that was always brighter and bigger. Like, okay, I want this freedom. I want this lifestyle. I know I have to do it. Life is not promised. All that stuff is always kind of circling in the back of my head. And that's what pushed me.
Wow. There's so much I want to unpack here. So this is so good because first is you getting comfortable with the numbers. And so for many of us, this is like brand new terminology. This is brand new work. And so even before the deal, there was the pre-work before the work. And that was learning what that means. What do these numbers look like? I love a good spreadsheet. So just being able to run those numbers. And so that's really important for people to understand. But then also being willing to jump in without knowing everything. I think oftentimes we feel that we have to learn everything in order to start, not really realizing that once we start, we're just going to keep learning anyway.
Yeah, that's a great point because, and you have to know like your threshold, the threshold for, do I know enough to be able to move forward? Because if you wait until you think you know everything, then once you start and then you realize there's 1,000 things that I wasn't prepared for, you know what I mean? So, and again, those are the types of things that I look forward to helping people with when I get the opportunity to mentor or to coach. Anticipate the things that I wasn't made aware of that could go wrong, you know what I mean, in the courses that I took or the communities that I was in like early on. Because there's just so much stuff until you get into it. It's just hard to really know. So you might as well start the other thing about starting is how strong is your team, right? Because how well can you lean on the people that if something comes up, I had people that I could call. I was with a group called the Investors Mentor with Natalie Peralta, and I was on their calls every week, listening and participating. And they were super helpful for me because if something came up in my deal, or as I'm trying to close it, or as I'm trying to do this or that, I would reach out and they would, or I would wait till the call and then ask the question. And they would say, hey, do this or that, or call this person or talk to this person. And so that was extremely helpful for me to be able to say, okay, even if I don't know everything, I have people that I can talk to that are familiar and can probably get me the answers.
That's so good. That's so good. Okay. Now, you talked about you were running your calculations beforehand. And then even, of course, when you were putting in deals, trying to figure out what are some of your most used formulas that you would recommend people get familiar with?
Definitely, like as far as the numbers go, what are we actually talking about? So my spreadsheet was really based on like, okay, let's subtract all the expenses and let's be super conservative with it. So if we are talking about a flip, then it's like, okay, because a lot of people, like you'll see deals come out there or wholesalers, or you might have like, okay, this is the purchase price and this is the after repair value. And now this is your spread, right? But from the after repair value, you got to subtract like, what are you paying the agent? You got to subtract the closing costs. You got to subtract, you know what I mean, your holding costs for how long it might take. And then you want to extend that because something could go wrong. You know what I mean? And just like getting all of that down. And I had calculated like, okay, what exactly are the utilities? And I called the utility company and say, for this property, what's your average for this? You know what I mean? So there was like that type of stuff, that just like getting all that down so okay, what is my actual cushion? And is this going to be worth it? So then you know what it is that you can pass up on as well. Because that's like really important too. Because otherwise you just kind of go for anything, or things can look really shiny and exciting until you can do those numbers. So that's something that sticks out to me a lot.
Yeah, absolutely. I've heard it say that sometimes your no is even more important than your yes.
100%.
Knowing what to say no to is so critical. Now, you talked about that this has stretched you in ways in this entrepreneurship journey that you hadn't imagined. Tell us a little bit more about that. Can you give us an example of what that's looked like?
Yeah, I mean, I'm not naturally a like aggressive person, but I definitely, you gotta pull out some of that when there's deadlines, or like if somebody is supposed to do something and they're not on top of it, or if the contractor's doing this or that. Either you have to pull it out, you gotta know when to pull it out, or you have somebody on your team who can just embody that role. That's what I would suggest, is like who do I have that's just like let me just lay down the hammer so I can maybe do some of the details or some of the other stuff or some of the relationship building or whatever. But it was like I was having to pull that out. So that really stretched me, and again, just like managing this stuff, like I said, there was so much like life that happened in the middle of it. I mean, I hate to just jump right into this, but in the middle of our flip, we lost our first son right in the middle, right? So it was like, I'm dealing with all this stuff, but like there's things that still need to happen, phone calls that need to be made, or like decisions that need to be made on this and that. And I'm having to like kind of address some of that stuff in between everything that's going on. So that was a stretch too, because it's like, I have to be able to separate, lifing from certain results that need to still happen. You know what I mean? Me being present and being supportive, and me being able to move the envelope, or at least empower somebody else to say, okay, do this, and this. I'm going to be gone for a week. Do this, and this. That's one of the big ways, is just like I'm a lot less hesitant when it comes to reaching out or asking for something that I want or need, or that's like, it's a different person like 2.5 years ago than me now, for sure.
Yeah, that mental fortitude, I always knew what mindset was before entrepreneurship. I had no idea though what it really entailed until I got into it. And now I understand and share greatly the significance of having regular mindset practice and like continuing to develop, because this is going to test you in ways that I never would have imagined. And being able to keep moving, like you said, when life is lifing, because that's what life does. And it's a question of, am I going to let life take over, or am I going to continue to move forward? And that is so critical. Now, so tell us about the flip, because we have people who that can be daunting in itself. And so your first property, you're renovating. What was that process like for you?
It was different than I expected, right? And this is like one big lesson just based on my experience, is like trust but verify is one statement that you need to embrace. Part of that is I need to know enough about everything so that even when I have a team or when I have an expectation, I need to be able to jump in and do certain things, right? So how I understood the situation going in was, okay, somebody's going to kind of show me the ropes, lead the way, like on this whole process. You know what I mean? And when I got into it, it was like there was nobody there to do the stuff. So I was having to like, okay, why am I having to do so much? Time is moving on, so I'm having to step up and okay, let me call and make sure this happens. Let me do this and do that. So that was that process is just not only knowing the numbers ahead of time, being able to just stay on top of the progress. And that's why if you have somebody who can be a project manager, that can be really valuable. You know what I mean? And that's the project manager, like sometimes the liaison between you and the GC at the general contractor, right? So, and then just like setting up the systems to be able to monitor things, like what type of eyes do I have? Especially because my first deal, I was out of town. So this was in Chicago. I'm in Maryland. This is not, something I can just go over there every day and check on. So there was a lot of like blind spots, and I'm having to figure out, okay, well, how do I get eyes on there, or who do I have on the ground? So if you have somebody that's nearby who can be a partner or be a help, that's definitely something that I would do differently. So those are a lot of the things that stick out to me with that process. It was just like, I need to make sure that I'm on top of every step. And ideally, if I have the person that can do it, then I know what questions to ask them, and like, hey, how is this coming? Or so those are some of the big lessons I took away.
That is good. Y'all, in the comments, put trust but verify. Trust but verify. That is so critical because at the end of the day, this is your property. This is your deal. And no one is going to look over it and check on it the way that you will. And so you definitely want to make sure that you are continuing that due diligence process the entire way through. Now, you mentioned, because you're in Maryland, but your first flip was in Chicago. What led you to even wanting to take that on in the first place?
So the first course that I took, the team was based in Chicago. So it was like all of my network, the people I was learning about, all of this stuff was in Chicago. So it was like, let me go ahead and do that there. Now, also, Chicago has a disproportionate amount of multi-unit properties in the city. So it's possible, if you approach it right, to be able to get a higher cash flow versus some other areas that like don't have any multi-units. It's all single family, you know what I mean? And then there's like other ways to approach that. But even like Baltimore, for example, is like there's not like a ton of multi-unit properties in Baltimore versus like in Chicago where it's like, a lot of them. So that's the opportunity was a bit different as well. But again, the team, and they were making connections to those different people. And that's who I was talking to. It was like, okay, it makes sense to give this a shot here in this area. But obviously there were lessons learned from that, from not being nearby.
For sure. Okay. Now, after you completed this Chicago flip, you then decided to take a real creative approach with the property in Maryland. Tell us a little bit more about this. House hacking is already a different in itself, but you have a very non-traditional hacking system in your property. Tell us about that.
Yeah, you can leverage a property, whether it's a single family or a multi-unit, and it's really important to know the laws in your city. But like I said, in Baltimore in particular, you can rent by the room. And that's partially because of that issue that I told you about, like the physical buildings. There's not a lot of multi-units, they're not just abundant multi-units like it is in Chicago, for example. So for the housing issue, to solve that, a lot of people will rent rooms. You know what I mean? Because it's just more affordable. So a lot of people will do it illegally, for lack of a better term, and like not be licensed and things like that. So I was like, okay, I need to find out, like, what does the law say? And they said in the city, it's 4 people per unit, basically, that you can have. So that's the route that I took. Again, another mentorship that I was in, that's where I learned about that process. So that's why I'm like constantly encouraging people to seek out that sort of mentorship and seek out different courses and different communities where you can get that information that it's just hard to kind of come across yourself. And using business credit, leveraging business credit to join those communities is something I'm always pushing as well. But that's how I found out about it, for the first time. And since then, I've learned that there's whole companies that are designated to find these properties and to even manage these properties for people. It's out there, and you can leverage like a single family home, get the income, and also it's like there's some flexibility in it, because like when you have a commercial property or a multi-unit, say you have like 10 units or something like that. And if somebody stops paying rent, you still have income coming in. If three or four people stop, you still have income coming in, versus like if you just have a single family and they stop, now you're completely on the hook for the mortgage and stuff like that. So that's an advantage when you're using multi-units and in commercial real estate, 5 units and above. But with a single family, you can kind of duplicate that with that room model. So again, you have to know your city, because some cities have laws, some neighborhoods have laws. So you have to kind of check that to plan your strategy. But if you're in the right place, you can get a regular single family and then leverage it to have multiple people there and have just a little bit more wiggle room and a lot of times a lot more cash flow.
Absolutely. That is so good, because so many people have roommates anyway. And so you are the landlord that is just kind of orchestrating that, especially for people that are just getting started out. Having that single family, it may be the easiest route for them, but this is a way to help diversify the income, which is part of the reason why we're all here, trying to add more additional streams. And that is certainly a question we get a lot of, like, well, if the tenants don't pay, then what? This is a way to kind of help to prevent that, where you're not set on just one person paying the rent. So that is so good. Now, what is that process like for renting out a room? How have you managed that? Do you manage it yourself, or do you have a property manager? Talk to us about that a little bit.
So I've leveraged property managers, right? And there's one interesting hack that I can give. First property manager I found through the course kind of community that I was in. And I went through there, and some things weren't going the way I wanted. So when I started to look for a new one, I just looked at the listings, the local listings, and then just called the listing and said, okay, well, who manages this? And I met some of the most amazing people in that process. And through that, I found my new property manager for that, So now with that said, like it's kind of like you indicated earlier, nobody's going to do it the way that you do. No one's going to care the way that you care about it. And if you find that person, hold on tight, right? But so there are certain things that I still have to kind of go back and forth and say, okay, this is how I want this to be done. Or there's certain things that maybe they don't do, they have certain strengths and certain limitations. And I might need to step in and say, okay, I need to be more detailed in this area because they're not really doing that. Or I need to, overlook the process here, but it's kind of a similar way as with a multi-unit or an apartment building where the property manager, if there's a room opening, then they would prepare that room, take the pictures, put the listing up, handle the thing. And then we would look at the tenant, the prospect, and see, okay, is this someone that's going to fit well with other people? That's the other thing you have to think about too, is it's not just the person that's there, but there's kind of dynamics of tenant dynamics. You know what I mean? So if the person's not going to be a good fit, then it can cause problems down the road because people are sharing a kitchen. You know what I mean? Sometimes they're sharing a bathroom and things like that. So you want to create like a harmony, like a synergy there wherever possible. So it's not just like everybody or anybody that's willing can come in, but that's pretty much the process. And I do leverage a property manager, and it did take a while. That hack was the fastest way for me to do it because not everybody would manage that type of property.
Mm-hmm. That is such a good tip. That is a good tip because, one, you are seeing that who's actually out there. And you mentioned earlier the importance of building your team. And so this is a way to be able to build your team by learning, first of all, who are the people that I need to connect with? And then also still recognizing one of the things that I always laugh when I'm talking with people about this is like, because I want passive income. That's cute. This is not it. Even when you have a property manager, this is still not passive because you're then just managing the property manager. And so I appreciate you highlighting, like, there are people where they may have certain skill sets, but there's still a gap for you specifically. So that's where you know that you need to lean in a little bit more. So tell us about your vetting process for your property managers. What sorts of questions do you ask them to know if they're going to be a good fit?
Yeah, so I want to know about how are they taking care of the property, like the actual maintenance. It's interesting because it seems like property management as an industry, sometimes it's just like we're handling the tenants. You know what I mean? Like if there's an opening, we're listing the opening and we're getting the tenants in. But it seems like they're not actually like managing the property itself, or like looking after, you know what I mean? There's maintenance issues, but sometimes like they're not really checking on it unless somebody complains about something. You know what I mean? But it's not like being like looked after. So that's one of the things that I look for, and also just having a clear understanding of the rates. Like what access do the tenants have? You know, what's the process like if they have an issue? Because I want people to have the best experience possible. You know what I mean? So if somebody has an issue and they reach out, are they going to get a voicemail and like not get a call back for 36 hours or something like that before anything happens? Or like what is that process? I want to know, and I want to get a feel for them as a person too, because how they interact with the tenants kind of reflects on the overall value of the experience. So if they're like rude and like snippy or something like that with people just for no reason, then to me, that makes people want to be less respectful of the property. So the more good energy you can create, to me, it's like you make it more long lasting, because now people are taking care of it more. You know, you have less issues. There's less chance of like a spiteful exit if somebody like, you know, needs to leave, or, you know, you just have more opportunities to be more amenable. And I think that adds to the value long term. So that's the type, like, what's the personality of this person? How are they interacting? And then finally, like, what systems are they using to be able to keep track? Because some people just run and gun, they're collecting cash, you know what I mean? They just send you a cash app, and other people are like super detailed and super organized. And like, these are the expenses and these are the reports that go out. That's the type of stuff that I'm looking for as well. And if not, asking myself the question, okay, am I willing to be detailed in this area and take care of this stuff if they're not doing that, as it relates to how much is their fee as well, you know, because you put that into the numbers, and the fee can be as low as 5% and up to 15% or 20%, depending on what's happening. So you just have to kind of know like what's the trade-off here, you know?
I love hearing about the questions that you're asking, because it speaks a lot to what you value in your business. And so that's a big mindset shift for a lot of people as we get started in real estate investing. Is we're not just buying property, we're buying a business. And so you can tell that customer service driven, like being very professional, is something that matters to you. And that was such a good call-in of making sure that they're not just responding to problems, but those routine maintenance tasks in the property. Because again, your business is this building, so you want it to be well taken care of. And if they're only reactive, that can cost you a lot more than if they have like a regular ongoing practice of making sure that your property is well taken care of. So that's amazing. We're really running HR. So anybody that works in HR, this is a great opportunity for you to lean in for helping people to find property managers, or for you to get your own property manager, which is really important and critical if you want to have the most passive process as possible.
For sure. And I love that you brought up that point about passive income. A definition that I've been using recently is like, passive income is I get more in return than I put in the hours. It doesn't mean no work. It's just I get a lot more for the work that I do. I'm not constantly having to do work to get the return.
I really like that definition. I really like that. Okay.
Yeah. So
got it.
And while I think we should be pushing towards, okay, how can I make this as passive as possible? And that's how you spend your additional time, is like thinking of ways to improve the process. But mindset wise, you should probably go in thinking like, whatever it is that you're going to do, you're going to be monitoring it in some way. And I can just tell a quick story, right? So I mentioned Airbnb investments, right? So on paper, the investment that I made, it made a lot of sense, because it was a company that was doing like a turnkey process. They're doing all the stuff, they're doing the listing, they have the property, they're just kind of taking the investment and running with it, and then you get the return. Great, right? But even with something like that technically should be as passive as possible. But if they were not doing everything that they're supposed to be doing, or maybe there's problems that are showing up, now you're having to step in and check on things. Now you're having to check on the numbers and say, okay, well, did they send this and do that? Or did this happen? Or why is this person not being responded to? And now you're having to ask more questions and be more involved. So I would just expect from jump, and this kind of comes back to trust but verify, but from jump that in my passive income pursuit, I'm going to have to be involved. I'm just going to have to find ways to be less and less involved, until the point that ideally the golden, place to be is it's completely set up. I don't need to touch it at all, because there's probably someone in place that cares enough about it, like me, or I've set the systems up and the standard procedures and the technology and whatever so that it practically runs itself. That's like the ideal place to be. But mindset wise, you shouldn't go in thinking that, okay, I'm going to jump in and just do like absolutely nothing, and interestingly, I do have a couple investments that I offer to other people where that's been the case for them. So I've been able to achieve that for other people where they invest with me and they didn't have anything to worry about and they receive like a check every month, you know what I mean? And it's good to go. But you want to verify that type of stuff like straight through. Again, mindset wise, you got to go in being ready to do the work, but just knowing that you're going to get more in return.
Right. And that's so good because it speaks to, you talked about earlier, we had to get crystal clear on like what freedom looked like for us. And so for me, like I know I talk about that I am looking for time, location, and financial freedom. And so I want to get to a point where I'm doing less for more, but that's not where I'm going to start. That's literally the optimal epitome of where it is. I have an Airbnb. And so I was self-managing my Airbnb. That was a lot of time. It let me know I didn't want to do that anymore, but I had to try it out to figure that out. And so, but if I had that expectation in the beginning that I'm not going to do anything, I would have seen that as a failure when it really wasn't. It just wasn't what I was looking for. And so being clear about what our expectations are, what are we wanting to get out of this, it's so important so that way we can know what avenues, because there's so many paths that we can take. Hey y'all, Tiffany here. Are you looking to purchase or sell real estate? As you know, I'm your aid to assets, and I want to help you with all of your real estate endeavors. Whether you're local here like me in the Fayetteville, North Carolina area, I can then help you purchase or sell your next property. If you're looking to purchase or sell outside of North Carolina, let me know too. I can still help you. I have a team of agents all over the country that I can connect you with to partner on your next deal. Let's get to the closing table, y'all. We buy our way to wealth, whether that's buying right or selling better. Can't wait to hear from you. Click on the link in the bio if you want more information on how to personally work with me or an agent on my team. Talk to you soon.
Tiffany, that's so huge. I'm just going to like repeat what you said because it's such a good point. It's just like knowing this, again, when you get into real estate, there's a million ways to win. And that's part of the problem, I think, is because there's so many ways to win, you have to decide which one you're going to do and stick with it. Do you know what I mean? But when you're deciding which one to do, the evaluation of yourself, and this is where kind of the personal development comes in, and the carving out time to just learn yourself for that type of thing. Like, how much time do I want to spend? Because some people, they love that part of the process. And for them, that doesn't even enter their mind that, hey, I'm going to be managing this Airbnb. As long as they're making money from it, that won't enter somebody's mind. There's other people that's like, I don't want to do any of this stuff. You know what I mean? I just want to, do other stuff with my life and just let it run, and you have to evaluate where you are in your finances too, and in your connections, because if you have a lot of money, then there are ways that you can just get into stuff that's just going to give you a return and you don't touch it at all. You know what I mean? But if you want maybe like typically the higher the return, the more of that, hands-on you're probably going to have to be with it, so you have to just know yourself and know like the goals, like how does this math and add up to where I want to go? And how does it add up to, I love that you brought up again, the location and time, because those are super critical. So I love it.
Thank you. Okay, let's shift gears a little bit now, because I definitely got to talk to you about this business credit. We hear lots of conversations about business credit, how we're able to get it, how we're able to leverage it. You've mentioned that you've used business credit to help with some of the groups and masterminds that you've been a part of. So tell us a little bit more, first, from just for those that may not be as familiar, what is business credit and why is it so important as an investor that we are going to take advantage of this?
Right. So the biggest thing about business credit, right? So, and this is stuff that I didn't know until I learned it. There's personal credit and there's business credit. The personal credit is based on your personal life. The business credit is tied to your business, right? So that means, and the biggest difference is the utilization. So if you take your credit card and you have $5,000 limit and you go to Macy's and you run up $5,000, your credit score is going to tank. You know what I mean? Because it's like, okay, they're saying you're using too much of what you have. If I take my business credit card for $5,000 and I run up $5,000, it doesn't impact my personal score at all, right? So this is like a separation that's really, really powerful, because once you get access to it, now you can leverage it in different ways. And again, my suggestion for people not to make any of the mistakes that I made is to be like hyper strategic about what you're using it for. But when you have access to it, you can use all of it, make your money from it, and have it not impact your personal credit. And one quick thing to clear up is on the business credit side, there's two main types. One is where you're personally guaranteeing it. So they're looking at your personal credit profile in order to qualify you to say this is how much we're going to give you on the business side. But once you do that, the accounts don't show up on your personal credit. The utilization doesn't show up on your personal credit. Only if you were to just completely default and just, mess it up completely, will they come for you personally. Aside from that, it's completely separate. Now, there's another type of business credit that is, I would call EIN credit. So you have your social security number, and then your business has a social security number called an EIN. So when you open your LLC, you have this EIN that's separate, and then you can build up the credibility of your business so that people will lend to the business without it being attached to you or any other person. So there's a whole process that you have to go through, and I really did both of these, a whole process that you have to go through to prove that your business can pay its bills. So you get these Net 30 accounts and these vendor accounts, and you do these other things, and you're slowly building up the credibility for the business so the business can stand on its own. And there's certain types of credit that you can get where the business is only responsible, and it's not tied to you at all, right? So but I leverage both of those to be able to, again, get into certain rooms, education, and some of my investments, or even while I'm in an investment, being able to float some of those costs. Like, especially like with the flip, I got to pay $20,000 for materials and my first payment, and I got to pay another 10 for this. And then, but all that is coming from the business credit card, and I'm getting points on that business credit card as well the whole time, instead of having to pull from my savings or having to pull on my personal credit card or get a personal loan and all this different stuff. So that's like a real high level, quick way to describe the difference that to me is like the most powerful, is that separation and the power that you can have. One more thing is the limits are actually a lot higher in business credit, right? So if I get a card on my personal, like I'm pretty lucky if I get a $10,000 credit card on the personal side. On business credit, like that's on the lower side on business credit. So 10,000, 15, 20, 25,000. Some cards are 50,000. Some cards are 75,000 on a credit card. If your personal profile is set up correctly, and if your business profile is set up correctly, those things are not uncommon, right? Like a 25,000 or 20,000, because they're expecting you to use it for business and use it to grow it and to generate more income or create jobs or whatever the case. So it's a whole different ball game. So it's something that everybody definitely needs to be aware of. And there's always a step you can take, like today, to be able to move towards it. So finding that step and just taking action is something I always suggest.
Thank you so much for that breakdown. That's super important. And I think that it's really critical for people to understand, again, going back to the premise of we are building and buying businesses with this real estate. And so having that business credit, because you are paying for stuff with your business. If you're in a flip, instead of having to come out of pocket for all the materials for the renovations, you can put it on that credit card. And that money you're not having to pay back immediately, so that when you do flip the house, you pay off your bills and rinse and repeat. And so you're getting to use, we hear often like OPM and other people's money. This is an example of other people's money at work for you, because it's not actually coming out of your savings account and you're being depleted while trying to get in on these deals.
Right, for sure. And another thing with that is typically when you start, and if you can be strategic about this, a lot of the business credit cards are getting 0% interest for 12 months, which is common on the personal side too. But when you combine it with the fact that whatever you put on here is not showing up on your personal credit report, it's not impacting your personal score, you're also getting points and you're also paying 0% interest. So you can technically, again, that's the OPM, where I'm leveraging this to be able to, to execute this real estate investment or business investment or, whatever else it's going to be. And I'm not necessarily having to pay interest on it. Now, what you do pay is like 1% is kind of the average. So if you have a $1,000 balance, then you're paying $10 a month, basically, for that, just as the minimum until that 0% period ends. And then there are also actually ways to extend or kind of transfer your 0% period, but that's like a whole nother conversation. But it can be a very powerful thing if you have a good strategy in place. And it's one of the closest things to free money that you can get.
Now, how do you suggest people go about creating a strategy to make sure that they are leveraging business credit the right way? What does that look like?
Yeah. So once you get it, and this is something I'm really passionate about, is like helping people get it, but then also like, how are they going to use it once they get it? Right. So the quickest thing I can say is, what is the return on this? Because the thing that you don't want to do is to start to fall into the trap that people fall into on the regular credit side, where you're just paying for certain expenses, you're just doing different things. You don't have a plan for how is this coming back, right? And that can add up very quickly. Ask me how I know, right? So that can add up. That can add up very quickly. So you want to know, okay, what is the return on this, right? And an example is if you are going into a flip, you know what I mean, or if you are going into a buy and hold. I'm not sure you've probably talked about this, but if you're going to do like the Burr method with a buy and hold, then okay, what is my exit strategy? So if I'm getting into this, how long is it going to take me? And how am I exiting? How sure am I? What's my backup? How much room do I have in the equity if the market shifts a little bit? You know what I mean? How much room do I have to be able to get out what I put in, at least on that card, to be able to pay it off completely? So that's some of the things. So whatever the investment is, if you can answer that question and feel confident that, okay, my exit strategy or exit strategies, because I have multiple backup plans, are all able to cover this, like what I put out, then you keep yourself out of trouble.
Yeah, that's so good. And it's another example of, this is why we have to start with strong financial habits personally, because the limits get higher. And so you mentioned, like with the business credit, now you're getting this money, you get the points, it's not going to your credit report, and also the limits are higher. You just got a lot more money to mess with. And so if we have not built the financial discipline on our personal credit and our personal finances to be able to manage the money that we get already, that's just a recipe for disaster. When you're now getting credit cards with $50,000, $75,000, it's just a lot more debt for people to be able to go in. So I always like to tell people it's a great, great tool, but we have to be disciplined and smart with it.
1,000%. And you would think that the personal, your personal finances wouldn't matter as much, you know what I mean, once you're on the business side, but it's everything, because there are humans that are running businesses.
Exactly.
You know what I mean? At least until AI takes over the world, there are humans that are running businesses. So if that human has certain practices, certain habits financially, that's just going to carry over, which is why a bank would lend money to a person that has a really good credit score and a really good credit profile, right? Because even though the business can't stand on its own yet, they're saying like, who's running this business and what have they done? So if their track record is good, if they pay back their lenders, if they're responsible, and I know this business is probably going to be responsible because this person is running it. So that's why the personal credit, personal strategies, personal habits financially are always the first step. And it's something that everybody can start doing today. You know what I mean? That's really important too. But building your personal credit profile, like those are the steps that need to happen like now. And if you can't do it, you got to get with some people who can help, right? Get a program or get a service or start researching it like very, very deeply. And I guess one other point I wanted to say is like, when it comes to when you have business credit, to me, the importance of mentorship. And I talked about exit strategy, but it's like, if you can get with somebody that can tell you exactly how to execute a particular strategy, then your likelihood for success increases dramatically, instead of you just getting into it and navigating it yourself for the first time. Which is why I would say education, the right education with the right people, can be really, really valuable, a valuable way to leverage your business credit, because then you don't have to necessarily come out of your pocket to do it. You can get the information and the shortcuts or whatever it is, all the mistakes that you don't want to make. You get all that from this person, and then they show you how to 10x that money, or how to 5x that money, or how to at least 2x that money. So now you can get everything paid back, and also you learned a lot faster than you would have if you just went there on your own.
That is so good, because often, like YouTube University, for example, is free, sure, but you're having to piece together so many steps. Instead, when you can invest and get a clear roadmap of what you need to do, how it should be done, and even having people, because every situation is going to be unique. And so when the inevitable pops up, you have a resource to be able to walk you through those nuances. I love that. And also track your expenses too. That's the other thing I want you made me think about, because the way you do everything is the way you do the way you do anything is the way you do everything. And so if you don't track expenses, I know we talk about budgeting on this show. you have to have a budget in your business. And so when you're in a renovation and you don't know how much money you spent on materials and labor, that is not a good look.
And if you don't know that, somebody else will either purposely or accidentally exploit that and keep whatever that difference is, or maybe they'll start spending extra, and that's why it's a good foundation to have, because now you know what questions to ask. Now you're looking at everything. So that's like one of the most important things. So if you're not good at that, maybe your spouse, your partner is the numbers person. And if you're just like, either you got to learn it for yourself, or you really got to get somebody on your team that you trust that can master that process. You know what I mean? And you at least know, how do I monitor this to be able to know, okay, what are the important points that I need to know as far as the numbers? So it's just is what it is. Like you have to know those in order to keep a pulse.
Absolutely. Okay. So I got to ask, because you mentioned there's definitely been some lessons along the way. So if you had to think back to, let's say, the top 2 lessons of, if I could give someone the opportunity to avoid this, these are the 2, what would they be?
You touched on one, right? And this kind of comes back to another point of focus. With focus, you are able to do one thing. You are getting better at that one thing. There's a million ways to win, and it's not about which method works. It's like the plan works if you work the plan, right? So even if, and you want to work it until success. So even if you do pivot into another area, which again, you'll learn there's hundreds of other areas probably in real estate alone, not to mention other types of business, other investment and stuff. And there's so many shiny objects that will pop up. But if you can stay focused, then you can limit that. And you can also limit how much you are spending on mentorship. And you can focus that and just say, okay, I'm going to stick with this until I am done. So that's one big thing as far as a lesson that I learned, because the good thing is I have a ton of knowledge, about a lot of different areas because of how I've done it. But I could have gotten so much further faster if I had just done one and just like really, really dug into it, right? So if you don't know what that is, don't fret. I would just say, just start and stick with something, right? Start and stick with something. And if you know, again, like we talked about, if you've done the work to know yourself and say, what are my goals? What's my target? What lifestyle do I want? What's my personality profile? That's another part of the coaching that I do, is like really understanding your personality profile on paper to know what gives me energy, what drains me, like what lanes should I really, really be in, to know like what role do I need to play in this? Which roles am I going to need to supplement with other people on my team? Which am I going to have to really, really learn? Once you have those in place, then it becomes easier to know, okay, out of these different paths, these make sense for me to go into. And then I can feel comfortable, like, okay, I'm just going to dig in at least until I get success. And I get success, or I can get it to where it's automated and it can run on its own. And then I can pivot off to something else.
Yeah. Love that. Love that. Okay. Any other ones?
I mentioned it before, but trust but verify. And maybe I can just give a little more detail about that. It's like, you need to, a lot of times, like relationships, you want to keep a good energy with people, right? And as you're networking, you want to keep good energy, but there's nothing wrong with, again, verifying what has this person done, like what are the receipts, right? What asking the questions about the process, or asking the questions about what happens if, right? And this is where people maybe underestimate the value of having a good lawyer, right? Because a good attorney will ask those questions, the what happens if, that are kind of between the lines of a good relationship. So it's like, if we have a good interaction, it's like, okay, I trust you, this is not going to happen, but we might both have good intentions, but maybe we had different thoughts about, if this happens, then this is what should happen next. And when that's not on paper somewhere, then it can get very muddled. And now you're having to, bring up arguments and trying to figure out stuff. You can cut a lot of that stuff off in the front if you are clear and can ask those questions. And you're get in the habit of asking yourself the questions. Okay, what happens if this person, is no longer available? You know what I mean? Or who takes over this, or who pays for this if this happens, or whose insurance is covering this? It's like all those types of questions can save a lot of headache if you do it up front, and it saves a lot of argument when it's on paper, because now you're just pointing to the paper and say, hey, look, it's not me. This is what the agreement says. So this is what we're sticking to.
Got it. So focus, trust, but verify. Love it. Kyle, this has been absolutely amazing. Thank you so much for sharing your experience and wisdom with us.
For sure, for sure. It's been a pleasure. I feel like the time has flown by.
I know, right? Oh my gosh. Okay. So one of the things that we like to do here on the show before we wrap up is we believe in vision setting. So when you look at you and your business, maybe a year, 3, 5 years from now, when we watch this recording, then what's going to be true for you and your business?
Yeah. So what'll be true for me is scale of impact, right? As far as like the knowledge that I'm sharing with people and the systems. So like you might not see the systems, but you'll see the result of the systems, which will mean that there's a lot more people that I'm impacting at once. So I'm very personable. I like talking to people, but a lot of times those conversations will disappear because it's just one at a time. So there'll be a lot more of all the information that I have will be out there for people. Like if somebody needs coaching or needs to be in a group, it'll be out there and available and easily accessible. And as a result, my business will, grow because as you give value, you grow in income as well. So that's what that's going to look like. And there's going to be a lot more in strategic partnership as well. So I've been definitely leaning into that term a lot recently. And that's where you can become more effective in less time, where you are leveraging other people's strengths and leveraging other people's experience and other people's audience. We talk about other people's money, but the mindset of just leveraging other people in general, and then bringing your best foot and your best skill to the table. That's what it's going to be a lot more of. So, and I think it will skyrocket a lot faster because of those factors.
Wow. Love that. Love that. Tell the people how they can connect with you. Tell them about your coaching, all the fun stuff.
So best way is on Instagram, right? So Kyle_E_Alexander. So Kyle E. Alexander on Instagram. And then you can find my link tree and see all the different stuff that I'm offering. You can even hear some of my music if you're interested and curious about that. But yeah, so and I do coaching. I do a mentorship with business credit and business funding. So if people are interested in getting that funding, I just like last week cleared somebody, I think it was like $210,000 in business credit in like a couple weeks. So that's not everybody's situation, but it can be your situation if you start to do some of the steps and start some of the early work and things like that. Or you could be sitting on that right now and not know it. So like finding that stuff out is like really important. So definitely reach out to me and we can see if like that's something that could work for you. And then again, general coaching, like business, life, and real estate. That's kind of been my lane recently. So find me on Instagram. That's the easiest way. And you can find everything else from there.
Perfect. You all, that will be in the description box below. And so definitely make sure to tap in with Kyle, especially when he talked about like the identity work and figuring out like your personality and your values. What does freedom mean to you? Kyle is a great resource to walk you through that process. So thank you again, Kyle, for sharing all of your information with us. Any last jewel that you want to leave the folks with?
I mean, to me, it's the sense of urgency, even if you are super busy, like life is not going to stop, right? Life is not going to it's not going to stop lifing, number one. And two, life is not promised. It's like you hear this all the time, but until it hits you, you don't really know. And I got a call a couple months ago, 2:30 in the morning, and I see the number on the screen. It's like, this person's not supposed to be calling me at this time. And it was my mom saying that my dad had passed like that overnight. Nobody was expecting it. He was healthy by all, measures. And it just happened. And it's like, man, everything that we need to do, everything that we want, it needs to start now. You know what I mean? And it's easy to let other things get in the way, especially when you're super busy, when you're working. You know what I mean? And you have to make that decision to say, okay, what does now look like? Now could be as simple as 5 minutes a day. I'm taking a really significant action. You know what I mean? Or for the hour a week, I'm cutting this out and I'm adding this in. But let's do it now so that we can achieve that life as soon as possible, so we can be living that, because we never know. Tomorrow is not promised. So that's the biggest thing that I can share is like, whatever it is, whoever you're working with, like take action now.
Do it now, y'all. I could not have said close this out any way better myself. Y'all, this has been another fantastic episode of the Aid to Assets podcast. Go ahead and run this one back. Get your notebooks. Y'all know it. Run this back, take some notes, and we'll see you at the closing table. Bye. Thank you for tuning in to another insightful episode of Aid to Assets. Remember, your journey from 9-to-5er to successful real estate investor is within reach. Keep learning, keep growing, and keep investing in your future. If you'd like to know more, connect with me on Instagram at Aid to Assets. Don't forget to subscribe, rate, and leave a review. Until next time, happy investing.